What's going on, everybody? Jeff here. Welcome back to the channel. All right, guys, a lot to cover in this video. First off, massive sell-off today as the debt ceiling crisis continues to loom. It seems like every single time there's a remark from out of the Congress, from the president, from any of the press, the market is reacting, and really in both manners. There's two comments on this. One, it's kind of like watching a train to where everybody sees it coming and you think to yourself, like, wait a minute, like, is this really going to happen? Or, is this just one of those things where it's kind of like they want your attention, shifted to what everybody can see and what all the focus is on. And in reality, what is happening in the background is really going to play out. So it's kind of like, what are we doing here? Is this going to be too obvious, or is this going to be something that we look back and just be like, oh, wait a minute, no way it could have happened. Everybody, was talking about the debt ceiling crisis, but there's continuously news, about this. Okay. There is a lot of history of the debt ceiling, being breached, them having to raise it. We've gone through this ever since COVID. We watched the 2011 face-off when the S&P eventually had downgraded the credit rating, for the market. That was really bad, causing a pretty big sell-off. But nonetheless, you've got all these articles talking about this. I want to just focus and shine some light on what we are seeing inside the market, okay? Because there's always going to be news that is going to pull the market in either direction, okay? But in reality, the charts are always going to tell the truest story, okay? So first of all, you take a look at this chart right here. We were consolidating pretty much since forever, the start of April, really just bouncing back in between this range. We had a couple false breakouts, a couple false breakdowns, and here we were back in the range. Well, we eventually did have, starting last Wednesday, that big push, that rally upside. We broke above that 414 and a half level, came back up, we retested it and continued higher, eventually getting stuffed at just above 420. Very, very clean price action, especially when you're looking at this on larger time frames. We came up here, we did a healthy pullback to what was previous resistance, asking again as new support, which is around this 417 and a half level. We tried that 420 again, only getting stuffed, right? So after that second attempt or failure to make a higher high, here we are bringing it down even lower, and we're actually back right at that breakout level. So seeing a little pop above this would not be out of the question, okay? But we're seeing two different confluences happening over the longer time frame. And I want to just shine a little bit of light on this to give you guys a little bit of a bigger picture. Okay, so here is the daily chart for the SPY. We've really just kind of been bouncing, like I said, back and forth ever since, the start of April, but really just kind of range bound from a bigger picture for the entire year. Okay, we've got up to this 430. We swung all the way down to 350. Here we are back up around 420. Looks like we're coming back to that 404. Who knows where we're going to go, kind of back and forth. And we talked about this a little bit inside the group of this extended period of being range bound, right? How we're going to be able to react and adjust with the market that could potentially be range bound for 3 to 5 years or even longer. It's not out of the question. I know a lot of you guys who are watching this video got in 2020, 2020, 2021, and it's really just a skyrocket, moon mission to the upside. And especially when everybody had zoomed out and we saw this little pullback and said, oh, we're going back to all-time highs. Then here we are back up again in August, all-time highs. And now you've got the shift slowly starting to kind of sway back to, okay, the bottom is in. And it's crazy. It's like nobody was bearish up here, especially when it bounced back up to that 460, failed to make that higher high. Nobody was bearish. But then all of a sudden 350, we bounce back up to 375, 380, and everybody becomes bearish. And it's just like, wait a minute, it doesn't really work that way. The masses are always behind the move. Okay. So this range bound, most likely will continue, and not only in the smaller time frame from that 404 to 414, like I said, getting pops above, but on that bigger, that overall, look at that weekly chart and you start to see that this tighter consolidation is not out of the question for an extended period of time, especially because you have multiple different factors. You have the charts doing one thing, you have, a certain small sector of stocks like we've talked about, your Microsoft, your Apple, your Nvidia, okay, that are really pushing the market to the upside. They're really, really close to all-time highs. And you have an entire other area that are down. Your banking industries, your financials, some of your, consumer staples are down, as well as some of your discretionary. And that's really weighing on the overall entire market. So seeing that shift, right? So when investors move out of tech tech and they start to go into your beaten down sectors, right? Some of those stocks might fall, what we just mentioned, and some of your other high growth stocks might rise, or you're beaten down financials or what have you. But overall, the entire market, the indices, they still stay range bound, right? Because it's not a consistent growth. There's not consistent money flowing into it. It's more of just going from the right pocket into the left pocket, right? They're buying down at support, whatever, of these stocks are down at support, selling up at some of the resistance. One thing I will point out to you guys, and this is very important, is take a look at, this shift that we have seen. Okay, so this right here is Lemonade. We could take a look at Palantir. We could take a look at, Upstart, G's. You take a look at DraftKings. Okay, some of these stocks that really probably haven't heard or haven't been on your watch list in quite some time, which are focused on the high growth sector, have seen a lot of growth. Okay, especially over the last 30 days. There's two comments about this. One, some of these stocks were heavily beaten down, right? And their earnings not only would say were to be potentially good earnings, they just got to the point to where things were not getting worse for the company, right? And so stocks are not only going to move in one direction when either things start getting bad or things are getting better. It comes to a point to where they also stop getting better, okay, or stop getting worse. And in some of these companies, that's exactly what you've seen happening. But the bigger picture is, okay, you've seen this rotation still focused on this tech sector, focused on this AI, okay? And now you're slowly seeing money start to shift over back into high growth. Could this be a potential for a blow off? Could this be a potential to where we are starting to see, listen, we're getting to a little bit of resistance here. We've had a solid, so many weeks about that bounce of 380. It's time to cool off. Or you take a look at this weekly chart and you can see this is, some pretty good, textbook, resistance level as well. We've got a little bit of a rising wedge forming right here. Whatever you so have it, could it be, right? And that's what we saw happening last time in August. And you can go back and take a look. We saw a lot of money shift back into this beaten high growth, because high growth is always the first to drop, okay, and the first to recover, right? But it's also the same thing goes with fake outs. So just keep that in mind. When we talk about this overall range boundness, it is not completely out of the question. Focus on what could potentially, be shifting. And like I said, guys, until things change from a macro level, I don't believe that the market will see that sustained, steady growth to where you can look back and you can see, and looking at these steady candles of constant, growth in a single direction, this trend to the upside with all healthy pullbacks. Until then, it gets to be chop and a bit of consolidation. So guys, that's it for this video. Take a look at some of these high growth stocks, pay attention to them. Also pay attention to the cycles, because like we talk about, they are cycles and they will happen again. So guys, that's it for this video. I'll see you in the next one.